December 18, 2025. Silver just hit $66.50 per ounce. That's not a typo. The white metal that spent a decade trapped below $30 has exploded by 127% in just 12 months. But this isn't your grandfather's precious metals rally. This is something far more dangerous, far more permanent, and hiding in plain sight on millions of rooftops across the world. The trading floors in London are in chaos. COMEX warehouses are reporting what insiders are calling a vault drain emergency. Physical silver is disappearing at a rate nobody predicted. And the culprit, it's not central banks. It's not hedge funds, it's solar panels. 700 million ounces of silver consumed by industrial demand in 2025 alone. That's nearly 60% of all silver mined on Earth, and the solar industry just claimed the lion's share. Here's what Wall Street doesn't want you to understand. We are watching the first commodity in modern history get consumed faster than it can be extracted from the ground. Not because of financial speculation, but because it's being permanently embedded into the infrastructure of the global energy transition. Every solar panel installed on your neighbor's roof contains silver that will never return to the market. Every electric vehicle rolling off assembly lines locks away 50 grams that humanity can't easily reclaim, and the mathematics are terrifying. In 2015, solar panels consumed just 50 million ounces of silver. A footnote: background noise in the commodity markets. Fast forward to 2025. And that number exploded to over 200 million ounces, with projections showing it could devour 300 million ounces annually by 2030. But here's the part that should make every investor, every government, every industrialist sit up and take notice. A research team at the University of New South Wales ran the numbers, and their conclusion was startling. By 2050, solar panel production alone could consume between 85% and 98% of current global silver reserves. Not the annual supply. The reserves. The total amount of silver left in the ground that we know how to extract. Let me put that in perspective. Global silver reserves, according to the U.S. Geological Survey, stand at approximately 550,000 tons. The solar industry, in its race to save the planet from carbon emissions, is on track to consume nearly all of it within a generation, and nobody saw it coming. Before we dive deeper into this crisis, I need you to do something. If you're watching this video and you care about understanding the hidden patterns that drive global markets, about seeing the financial earthquakes before they hit that subscribe button right now. Click the bell icon so you don't miss these investigations. And here's what I really want to know. Drop a comment below and tell me where you're watching from and what time it is where you are. Are you in New York watching this at your desk? Sydney, catching this over morning coffee? London, winding down your evening? I want to build a global community of people who see through the narratives, who understand that the real story is never the one on CNBC's ticker. So comment below your location, your time zone, and whether you saw this coming. Let's continue. The silver market has been screaming a warning that almost nobody heard. For 5 consecutive years, from 2021 through 2025, the world has consumed more silver than it produced. 5 years. That's not a blip. That's not a temporary imbalance. That's a structural crisis. In 2024 alone, the deficit reached 182 million ounces. In 2025, analysts project it widen to somewhere between 149 and 240 million ounces, depending on which research firm you trust. But here's what makes this different from every other commodity shortage in modern history. This one can't be fixed. Here's why. Roughly 70% of all silver mined on Earth doesn't come from silver mines. Let that sink in. Nearly 3/4 of the world's silver supply is a byproduct of mining other metals: lead, zinc, copper, gold. When a mining company digs for copper in Peru or zinc in Australia, they get silver as a bonus, an afterthought, a secondary revenue stream. This means that even as silver prices hit all-time highs, even as demand screams for more supply, production can't simply ramp up. The economics don't work that way. A mining company isn't going to open a new zinc mine just because silver hit $66. They're going to open it because zinc prices justify the capital expenditure. Silver just comes along for the ride. The numbers tell the story. Global silver mine production peaked in 2016 at roughly 900 million ounces annually. By 2025, that number had actually declined to approximately 813 million ounces. Production fell, while demand exploded, and the gap, it's being filled by draining above-ground inventories that took decades to accumulate. The London Bullion Market Association's vaults, which once held enough silver to supply the world for over a year, have seen their stockpiles plummet by nearly 40% since 2020. COMEX warehouses in New York reported that in early December 2025, a massive portion of registered silver was claimed for physical delivery. Traders are calling it squeeze, the kind that happens when the paper market for silver, the futures contracts, the financial instruments, suddenly realizes there isn't enough physical metal to satisfy delivery demands. China, the world's manufacturing powerhouse and the largest consumer of silver for industrial applications, has reportedly seen its strategic silver reserves fall to decade-low levels. In a nation that added 240 gigawatts of solar capacity in 2023 alone, and continued that blistering pace through 2025, the appetite for silver is insatiable. But the solar story gets even more complex. Even more alarming when you understand what's happening at the technological level. For years, the solar industry operated on what's called PERC cell technology. These panels used a modest amount of silver, and manufacturers had gotten pretty good at what the industry calls thrifting, which is a polite term for using less silver per panel as prices rose. Then came the next generation, TOPCon cells and silicon heterojunction technology, known as SHJ. These new panels are more efficient. They convert more sunlight into electricity. They're better products, and they require 50% to 100% more silver than the old generation. TOPCon cells use roughly 20 to 26 milligrams of silver per watt compared to PERC's 15 to 16 milligrams. SHJ cells are even more silver-intensive, consuming 30 to 37 milligrams per watt, more than double the old standard. Here's the trap: the global climate crisis demands more solar capacity. Governments from Washington to Beijing to Brussels have committed trillions of dollars to the energy transition. The International Energy Agency projects that from 2024 to 2030, over 4,000 gigawatts of new solar capacity will be added globally. That's not a goal. That's already in the pipeline, already under construction, already financed, and 80% of that expansion is expected to use these new, more silver-intensive technologies. Do the math with me for a moment. The solar industry consumed about 200 million ounces of silver in 2024. With the shift to TOPCon and SHJ technology, and with the planned capacity additions, consumption could hit 300 million ounces by 2030. Remember, total mined silver supply is only about 813 million ounces per year, and it's not growing. That means solar panels alone would consume 37% of global silver production by 2030. Add in the 90 million ounces needed for electric vehicles, the silver for 5 infrastructure, for AI data centers that each require 1.2 kilograms of silver per server rack, for consumer electronics, for medical applications. And you're looking at industrial demand consuming 700 to 750 million ounces annually. That leaves maybe 100 million ounces for jewelry, silverware, photography, and investment demand combined. The solar industry knows this is a problem. Research laboratories from Stanford to the National Renewable Energy Laboratory are racing to find alternatives: copper plating, aluminum printing, perovskite solar cells that might not need silver at all. But here's the reality: these alternatives are years, maybe decades, from being commercially viable at scale. Silver's electrical conductivity is unmatched. It's 6% better than copper, which sounds small until you realize that in a solar cell, that 6% is the difference between a panel that's economically viable and one that's not. And even if alternatives arrive, even if some brilliant materials scientist discovers a way to build solar panels without silver, the damage is done. The silver is already embedded in billions of panels on rooftops and solar farms across the planet. Locked away for 25 to 30 years. The lifespan of a solar panel, it's not coming back, not quickly, not easily. And by the time those panels are ready for recycling, decades from now, the solar industry will have consumed a century's worth of reserves. Let us talk about what happens when an essential commodity enters a structural supply deficit with no easy fix, because we've seen this movie before. And the ending is always the same. Silver started 2024 at $23.35 per ounce. By October of that year, it had climbed to $34.85, a level not seen since 2012. Wall Street analysts called it a rally. Some called it frothy. Most expected a correction. They were spectacularly wrong. By December 31, 2024, silver had pulled back slightly to $28.92, and the consensus forecast for 2025 was cautious. BMO Capital Markets projected an average price of $26.50 for the year. Capital Economics saw $27. The bulls, the really aggressive forecasters, were targeting $40 by late 2025. They were all too conservative by half. Silver opened 2025 at $28.92 and it exploded. By September 2025, it had blasted through $40 by early December. It shattered $60 for the first time in history on December 11, 2025. It touched an intraday high of $64.21. By December 17, it was trading at $66.52. In less than 12 months, silver had more than doubled, a 127% gain. It outperformed gold by a factor of 2. It left every traditional safe haven asset in the dust. But here's what's fascinating: this wasn't driven by inflation fears. It wasn't driven by currency collapse concerns. It wasn't driven by the usual precious metals narrative. This was industrial demand colliding with inelastic supply, and the market finally pricing in reality. Bank of America raised its 12-month silver target to $65 per ounce. BNP Paribas, one of Europe's largest banks, published a research note suggesting silver could hit $100 per ounce by the end of 2026, not because of financial speculation, because of mathematics, because of physics, because the solar panels being installed today will need silver that doesn't exist. Trading volumes in silver futures and options at CME Group hit all-time records in 2024. Silver options trading peaked at 18,027 contracts in a single session by late 2025. Those numbers look quaint. Exchange-traded products backed by physical silver saw inflows of approximately 130 million ounces in 2025 alone. That's more than 10% of global annual production flowing into investment vehicles. Not even counting industrial demand, the futures market revealed something even more telling. In the COMEX silver market, the concentration of short positions held by the 8 largest traders reached 52% of open interest, while long positions were just 26%. This is historically extreme. It suggests that large institutional players, probably including banks with industrial clients who need silver, were desperately trying to cap prices, to prevent a squeeze, to keep the market orderly. And they failed. Price discovery happened anyway. When a commodity reprices this violently, fortunes are made and destroyed with mathematical certainty. Let us talk about who wins and who loses when silver breaks out of a decade-long range and enters triple digits. The winners, silver mining companies, had the trade of a lifetime handed to them. First, Majestic Silver, which operates the Santa Elena mine in Mexico, reported a 7% increase in production to 10.3 million silver equivalent ounces in 2024. With silver prices doubling in 2025, their revenue exploded without them lifting an extra finger. The company's CEO, Keith Neumeyer, had been predicting this moment for years, warning that silver was heading to triple digits. Because you need triple-digit silver just to motivate the mining companies to start investing again. He was right, and his shareholders profited handsomely. But the real winners aren't the miners. They're the investors who saw this coming. Physical silver. Buyers who accumulated metal in 2023 and 2024 when prices were in the 20s watched their purchasing power multiply. An investor who bought 1,000 ounces at $25 in early 2024 was sitting on a $41,000 profit by December 2025 and a $25,000 investment in under 2 years. Pension funds and institutions that allocated even a small percentage to silver as an inflation hedge or industrial hedge saw outsized returns. A 5% allocation to silver in a balanced portfolio would have added 6.4 percentage points to total returns in 2025. That's the difference between an okay year and a spectacular one. The losers, let's start with the obvious ones. The short sellers got demolished. Any hedge fund or institutional trader that bet against silver in 2024, thinking the rally was overdone, lost catastrophic sums. The COMEX data shows billions in short interest that got squeezed as prices blew past $40, past $50, past $60. Some of those positions were held by banks hedging on behalf of industrial clients, which means they weren't pure speculators. They were legitimate hedgers who still got crushed because the fundamentals overwhelmed the technical picture. Solar panel manufacturers are facing a nightmare scenario. The cost structure of their entire industry just got upended. Silver accounts for about 12% of a solar panel's total cost and more than 50% of the non-silicon cost. When silver was $25, that was manageable. At $66, and potentially heading to $100, the economics of solar become strained. Some manufacturers in China and India are desperately trying to implement thrifting measures, reducing silver content per panel. But physics limits how much they can cut without sacrificing efficiency. This is creating margin pressure across the entire solar supply chain. From manufacturers to installers to the utilities buying the power, the electric vehicle industry faces a similar problem. Modern EVs use about 25 to 50 grams of silver per vehicle, triple what a traditional internal combustion engine car uses. At $25 per ounce silver, that was $40 to $65 in silver cost per vehicle. At $66 per ounce, it's $105 to $172 per vehicle. Not catastrophic, but significant when margins in the auto industry are already thin. But the biggest loser might be the governments and international organizations that committed to aggressive climate targets without accounting for commodity constraints. The European Union's Green Deal, China's carbon neutrality by 2060 pledge, the United States goal of 100% clean electricity by 2035. All of these plans assume that solar capacity can expand exponentially, and it can, technically. But can it expand if the raw materials don't exist? If silver hits $100 and solar panel economics break, what happens to those commitments? There's a historical precedent for what's happening to silver right now. And almost nobody in the mainstream financial media is connecting the dots. It's the story of palladium. In the early 2000s, palladium was a little-known industrial metal that traded around $100 per ounce. Its primary use was in catalytic converters for automobiles. Then two things happened simultaneously: global car production soared, especially in China, and environmental regulations tightened, requiring more palladium per vehicle. The industrial demand curve bent exponential. Palladium supply couldn't keep up. About 80% of palladium comes from just two countries, Russia and South Africa, and production was relatively inelastic. Prices started climbing. The automakers tried to substitute. They researched using platinum instead, which was cheaper, but platinum wasn't as effective in catalytic converters. And by the time they'd invested billions in re-engineering, palladium prices had already repriced to reflect the new reality. Does this sound familiar? Silver is palladium 2.0, except the market is 100 times bigger. The applications are more critical to the global economy, and the supply deficit is worse. Palladium production could theoretically ramp up if Russian and South African mines invested heavily. Silver production can't, because 70% of it is a byproduct. There's no lever to pull. There's no valve to open. Supply is what it is. And here's the part that should terrify policymakers. Palladium's price spike disrupted one industry, automotive. Silver's price spike will disrupt dozens. Solar, electronics, medicine, AI infrastructure, 5 networks, consumer goods. Every smartphone contains about half a gram of silver. Every laptop, every tablet, every server and every data center relies on silver connections. When palladium hit $2,800, the auto industry absorbed the cost and passed it to consumers. When silver hits $100, can the electronics industry do the same? And the solar industry? Or do we see a demand destruction scenario where certain applications become economically inviable? There's a geopolitical dimension to the silver crisis that's barely being discussed, and it might be the most important piece of the puzzle. China dominates solar panel manufacturing. In 2023, Chinese factories produced about 80% of the world's solar panels. They're also the world's largest installer of solar capacity, having added more gigawatts in the past 2 years than the United States has installed cumulatively in its entire history. This makes China both the largest consumer of silver for industrial applications and the controller of the supply chain that determines how efficiently silver is used. When the University of New South Wales study warned that solar panels could consume up to 98% of global silver reserves by 2050, they were essentially describing a scenario where Chinese industrial policy determines the future availability of a strategic commodity. If Beijing decides that achieving carbon neutrality is worth any price, if they push solar deployment regardless of silver costs, they have the economic and political power to corner the market. We've already seen hints of this. In 2025, Chinese strategic silver reserves reportedly hit decade lows. Not because China stopped accumulating, but because industrial demand consumed their stockpiles faster than they could replenish them. The breakneck 44% increase in local industrial demand that the Silver Institute documented isn't slowing down, it's accelerating. Meanwhile, Western nations are waking up to the problem late. In 2025, the United States government added silver to its official list of critical minerals. That's bureaucratic language for we realize we might have a national security problem. The Department of Energy now classifies silver alongside lithium, cobalt, and rare earths as materials essential to America's economic and military competitiveness. But here's the problem: listing something as critical doesn't create supply. The United States produces about 930 metric tons of silver annually, roughly 3% of global supply. Mexico produces 6,300 tons, Peru produces 3,400 tons, China produces 3,600 tons but consumes far more than it produces. This means Western nations are dependent on Latin American mining operations for the commodity that underpins their energy transition, and those supply chains are fragile. In 2024, Mexico implemented new mining reforms that impacted approximately 5% of projected output. Political instability, labor strikes, environmental regulations, all of these factors can disrupt supply with no backup plan. When Newmont's Peñasquito mine in Mexico, one of the world's largest silver producers, faced a 4-month strike in 2023. It took 30 million ounces off the market. That's 3.7% of global supply gone, because workers and management couldn't agree on wages. Russia, which produces about 1,300 tons of silver annually, announced in 2025 that it plans to acquire $535 million worth of silver over the next 3 years for its strategic reserves. This was the first time any central bank explicitly included silver in its purchasing plans during the current precious metals bull market. It's also a signal that nations are starting to view silver as a monetary asset again, not just an industrial one. If we're entering an era of commodity nationalism, where countries hoard strategic materials the way they used to hoard oil, silver is going to be at the center of that conflict. So here's where we are. It's December 2025. Silver is trading at $66 and change. The market has already repriced once. The question everyone's asking is, can it go higher? Should it go higher? And what happens if it does? The mathematical case for $100 silver isn't speculation. It's arithmetic. The Silver Institute projects that the supply deficit will persist through at least 2026, with some analysts arguing it could continue for another decade. The cumulative deficit since 2021 has already reached approximately 800 million ounces, which is roughly equal to one full year of global production. That silver isn't coming back. It's in landfills, in solar panels, in devices that won't be recycled for decades. Meanwhile, demand is accelerating, not slowing. The solar industry's trajectory is set. The International Energy Agency's roadmap calls for 60 terawatts of solar capacity by 2050 to achieve net zero emissions. Every terawatt requires approximately 6,000 to 7,000 metric tons of silver. Do that math. 60 times 6,500 equals 390,000 tons. Global reserves are 550,000 tons, even accounting for recycling, even accounting for technological improvements. The numbers don't work. Electric vehicle adoption is following a similar curve. Global EV sales are projected to hit 30 million units annually by 2030. At 40 grams of silver per vehicle, that's 1,200 tons of silver, or about 38 million ounces, just for cars, not including charging infrastructure, which also requires significant silver for electrical connections. Artificial intelligence is the wild card nobody priced in 2 years ago. The explosion of data centers to train and run large language models, the infrastructure for edge computing, the 5G networks required to move all that data. These are all incredibly silver intensive. A single AI server rack can contain 1.2 kilograms of silver. Microsoft alone is planning to build data centers requiring hundreds of thousands of server racks in the next 5 years. When you layer all of this demand, when you account for the fact that supply can easily increase, the case for $100 silver isn't bullish thinking. It's conservative thinking. Some analysts are privately modeling scenarios where silver hits $150 by 2028 if the supply deficit doesn't resolve. The most aggressive bulls, people like Keith Neumeyer, who've been right for the past 3 years, are talking about $200 silver in the 2030s. Could they be wrong? Of course. Markets can surprise. Technologies can change faster than predicted. But the base case, the scenario where things unfold roughly as expected, leads to triple-digit silver. And if that happens, the implications ripple across the entire global economy. If you've made it this far in the video, you understand that we're not talking about a trading opportunity. We're talking about a structural realignment of commodity markets that's going to affect everyone, whether you own silver or not. For investors, the message is clear. Silver is repricing from a precious metal that trades based on monetary policy and inflation expectations to an industrial commodity that trades based on supply and demand fundamentals. That repricing might be 50% complete, or it might be 10% complete, but it's not done. Any portfolio that doesn't have exposure to physical commodities, and specifically to silver, is making a bet that 700 million ounces of annual industrial demand is somehow going to find supply that doesn't exist. For industries, the message is more complicated. If you're a solar manufacturer, you're facing an existential cost pressure. If you're an electronics manufacturer, you're looking at higher input costs that you may or may not be able to pass through to consumers. If you're a utility company planning to buy solar power under long-term contracts, those contracts just got repriced whether the ink is dry or not, because the cost of solar panels is about to jump. For governments, the message is urgent. The energy transition requires materials. Those materials are finite. And if you commit to aggressive climate targets without securing access to the commodities needed to hit those targets, you're not making policy, you're making wishes. The European Union, the United States, China, and every other major economy needs a silver strategy, not a hope. A strategy: domestic production, strategic stockpiles, recycling infrastructure, international partnerships, because the current trajectory is unsustainable. And for regular people, for the person watching this video who isn't a trader or a policymaker or a CEO, the message is about awareness. The price of the smartphone in your pocket is about to go up. The cost of putting solar panels on your roof is about to go up. The economics of electric vehicles are about to shift. Not because of inflation in the traditional sense, but because we're running out of the materials required to build the future we've been promised. In 1980, silver hit $49.45 per ounce during the Hunt brothers' attempt to corner the market. It was a speculative bubble driven by manipulation and leverage. The price collapsed within months, and silver spent the next 30 years as a footnote in commodity markets. What's happening now is fundamentally different. This isn't speculation. This is the solar industry, the electric vehicle industry, the AI industry, all converging on a commodity that can't meet demand. 700 million ounces consumed in 2025. Potentially 900 million by 2030. Against a supply that can't grow past 850 million no matter how high prices go. The mathematics are brutal. The University of New South Wales warned that 85% to 98% of global silver reserves could be consumed by solar panels alone by 2050. That is not a forecast. That's a countdown. And it started years ago. Silver closed today at $66.50 per ounce. Whether it hits $100, $150, or $200 in the coming years is almost beside the point. The real story is that humanity is consuming a finite resource faster than it can be replaced. In the name of fighting climate change, and almost nobody is talking about it, until now. If this investigation opened your eyes to something the mainstream media isn't covering, if you want more deep dives into the hidden patterns shaping global markets, subscribe to this channel. Share this video with someone who needs to understand what's coming. And drop a comment. Where are you watching from? What time is it? And do you think silver hits $100 in 2026? The crisis is here. The question is whether we'll adapt fast enough to matter.